Welcome back to the Two Comma Club podcast. Today I am joined by a very special guest. First met him at Funnel Hacking Live in 22, and then again at FHL International, and most recently again at The Last Dance. And so I'm really excited about this. This is Brad Gibb. He is the Chief Wealth Officer, and he's doing some really amazing stuff in the wealth space. So, Brad, if you wouldn't mind walking people through what a Chief Wealth Officer is, that'd be fantastic.
Yeah, heck yeah, John. Thanks for having me on. This is great. And man, I can't. How many times have we bumped into? Just go to FHL every year. We will bump into, make great friends. So it's been a fun journey for that. Yeah, really quick on Chief Wealth Officer. What it describes the role we play for our clients in the game of wealth. So for us, my focus is I work solely with founding entrepreneurs in helping them convert the profitability that their business is generating into long-term, long-standing wealth. But the problem to that is we all think that we need to learn something new or add a new skill set to our repertoire or whatever. And the thing that's holding us back from building this lasting wealth as our business grows is something that we don't know. And that's what we're working to help everybody understand, that that's not the actual problem that's going on. And it's not even the problem that, I just need a better CPA or I just need a better investment advisor. It's not even the lack of that either. And kind of the analogy here is, I've been in the marketing space for a long time, but I'm still terrible at marketing. Like, marketing just is not my thing. I love understanding the high level of it, but that's not what I execute on. And when I came into the world of online marketing from the more traditional wealth space of, belly to belly, face to face, as it began to grow, I, had a funnel builder, and I had a copywriter, and I had an ads manager, and I had a MarTech person. I had all these people, and they all needed attention from me. And I'm an introvert, and I'm not good at marketing. And so eventually I just stopped talking to anybody, and my whole marketing engine came to a stall because I was that central piece to it. And then I went to a mastermind, and they said, Brad, you're an idiot. And I was like, thank you, but what am I being an idiot about? And they said, well, there's this thing called the Chief Marketing Officer. You should hire that person, and then you only have to talk to one person, and that person talks to your copywriter, your funnel builder, your MarTech person, and deals with all the stuff that you're not good at, and you guys just get to talk at the level you are. And I was like, duh, I know how companies grow. Why didn't I think of that? And so that's what actually removes the roadblocks to growing and scaling a business. But the problem on the wealth side of it, that same thing happens, right? You have to talk to your accountant and your CPA and your attorney and your insurance person and your real estate person, crypto, everything that you're wanting to do, they all need answers from you. And that's what actually grinds this entire thing to a halt. And in that realization and working, coming up through and working with business owners, I saw over and over and over again until we finally really put our finger on, because I tried to teach people to do it. I tried to get them a better CPA. I tried to implement a better strategy, and it just would never go anywhere until we had that same, man, I'm an idiot. I'm doing this totally wrong. Why don't we just come in and play the role that should exist, which is Chief Wealth Officer, right? You need somebody who can speak accountant and speak attorney and speak insurance and speak real estate, and then bring back all the information, all the decision, help work to create strategy, and then go out and actually execute on that so that you get to stay where you're best positioned, which is inside and running your business. And that it becomes a partnership to build wealth, as opposed to, hey, here's just more information, or here's different tactics, or here's different investments you should have. Because if you go talk to your attorney, they're going to say, don't do anything, crawl under a rock so you don't get sued. If you talk to your accountant, they're not going to be far from that, right? But if you talk to your real estate guy, they're going to sell you real estate, crypto, they're going to tell you, and you're the one that has to come up with what is the most effective strategy, which is just outside of most of our, as business owners, the skill set of building and growing a business is so vastly different than the skill set of keeping and stewarding that wealth effectively. And so it becomes the marriage of that. So that's the role we play with our clients. We educate and we help support, but we're not asset managers. We're not tax, we don't file taxes. We don't actually create the underlying investments. We're the coordinators of the wealth strategy to ensure we get that across the finish line. So that's our unique angle to what we're doing.
That's really awesome. I see a huge need for that in this space. And one of the things that I would kind of make as an analogy is the idea of when you look at wealth through the eyes of a business owner, they have kind of like a situation like where you're going to build a Lego car, right? Like in the end, the Lego car is the wealth, but there's two parts to getting there. And the one is the building blocks, which is the money the business creates. And then there's the guidebook for actually putting the car together. And I kind of see you guys coming in and acting as the guidebook and helping to make sure that those puzzle pieces are in the right places.
Exactly. Because it's not just about, you're right, just sticking random blocks together, right? It has to be the right block at the right time in the right order to get where we want to go. And yeah, that's a great analogy. Same exact thing for wealth.
Yeah, I appreciate that. So I'm curious to know how did you first come across the understanding of this need in the space, and how did you get into the room where you started having these conversations with these people to ultimately understand that you could serve them in this capacity?
That's a great question because I didn't start. I had to come to that epiphany over time. So before getting into the online marketing space, we were much more typical traditional wealth type firm. We did insurance, we did investments, we did tax strategy, and then we were actually the back end fulfillment for some pretty big online marketing names. They would teach and educate, and then send fulfillment to us. And then overnight, it was really over the course of about 2 months, we lost our two biggest lead sources, just like 95% of our leads, and so we just began to sink. And that was when I came to the realization. I was like, okay, I need to control lead gen if I want to be anywhere that I want. And then I got a book called .com Secrets, and then ended up at Funnel Hacking Live, and then wrote Russell a check, and went through all of that. But I had come in trying to fix and position myself the way that I did everything that Russell teaches. And when he let us into the inner circle, which we had no business being there, by the way, because we had no idea what we were doing from an online marketing standpoint. Like, I'm glad I met Russell as early as I did, because if I had to wait for how talented the world of funnels is now, I would have never made it. But on the interview, when he brought us in, he's like, "Hey, as a rule, I don't let financial people into my masterminds." I'm like, "Well, in case you didn't know, I'm a financial person. So what?" And he's like, "But I've seen what you do, and I really like the angles you take and what's there." And he's like, "Really, I want you inside to help me and help my inner circle, because here's all the problems that we see with growing this." And he's talked about this on stage, so I'm comfortable talking about this. But coming into that level of that caliber of a group, I just assumed the business owners had everything figured out, that they weren't going to need me. They were smart, they were successful, they made a bunch of money, so they weren't going to need me. There were other people out there that needed me. But come to find out, that was the realization I had, that they had no better idea, and sometimes a lot worse idea, of what to do with their money than the more traditional high income earners, W-2 side of the employee world that we were working with prior. And so it was repeatedly being like, I came in to learn to market. Like, I was genuinely there to learn for myself. But in all the connections I was making, and then in subsequent rooms, as I grew my business and had access to, or I guess the need for even more coaching and bigger rooms, the theme was there every single time, that there is a vast difference between the game of income on the business side and the game of wealth on the other side. And so it just, having spent enough time around and then being my own avatar for it, like, I had a unique angle that I had actually learned the game of wealth first. That's what I studied. That's what I came into. And so I just assumed that everybody looked at the world through the same lens that I did. And come to find out, like, I was trying to learn the income game, and that's what everybody else had learned first. And then they needed to be taught the wealth game. And so it was just being exposed. I had no idea that was even, a need. And then I spent almost a decade just inside the world of founder, startup business owner, because that's what I was myself. And then finally, as I think all businesses do, you reach a crossroads of, okay, what am I really here for, and what's our really unique angle to this? And so actually, it was just in the last couple of years, I turned off everything else that I was doing, shut down, sold off, handed off, and just, we went all in on this chief wealth officer idea. And so that's what we do exclusively, because we just came to a crossroads of, this is needed, and we've now got enough around this to where we're going to double down and go all in on it. So that's how we got here.
That's awesome. I love that. That's it's a really cool way that you came from the wealth world and then found in the business world that there was a huge need for that. I myself have noticed that as well. I graduated with a finance degree, and
Yeah.
I had a similar experience where I thought everybody saw the world through this way, and then come to find out it isn't that way. And I mean, it makes sense when you think about the education system and how there's a lot of missing pieces and parts in that. And so I'm curious to know, like, kind of what are your thoughts about what we could do in the education space to help identify some of these problems a little bit more for up and coming
Okay.
generations.
So glad you asked this question. I get fired up about this. So, and this actually, as I, a couple of years ago, there was just a crossroads point where I really had to like look and say, okay, what am I actually about? Like, what is the bigger, movement level conversation that I want to be having? And this feeds right into that. So, couple of, for me anyway, they were really interesting stats. If you go back to like, okay, we're getting nerdy for a second. We go back to like England in the 1700s, right? More than 95% of the land was controlled by 5% of the people. So it's huge disparity and if we use land for a proxy for entrepreneurship, because back then that's what it was, right? Only 5% of the world owned anything that would be like a business, and everybody else worked for them. And that led to what? Everybody said, screw you, I'm leaving, and left and came to America, right? And so if you look at America in the late 1700s and early 1800s, that number almost exactly reversed. About 90% of land was owned by the other way around. 90% of people owned land, right? And only 10% of the people didn't. And if we use that as a proxy for entrepreneurship, there was a revolution toward entrepreneurship coming over and forming America. But what's interesting is starting in about the 1930s, 40s, and certainly into the 50s, we began to have a shift back toward centralization. So education became centralized, politics became centralized, capital started to centralize in markets. And so we moved back to where today, if you had to guess, how many people work for themselves? What percentage of the population in the United States do you think works for themselves?
I'm gonna guess maybe about like 2%.
Oh man, I set you up for a little too much. It's 7%, but still a surprisingly low number. But we're right back to like England in the 15 and 1600s, right? Nobody works for themselves, nobody's entrepreneurial, and we're suffering the consequences of that, right? Lack of innovation, not as much opportunity as we'd like to have. Like the world's not moving as quickly, so I think that pendulum is about to swing and go the other direction, right? It can't sustain where we are. So I think we're on the cusp of a new revolution of entrepreneurship. But what has to happen on the education side, and I actually recently had this conversation with, where I'm in Russell's Atlas group and talking to them about it, I actually polled the room and said, how many of you are entrepreneurs by choice? Meaning like, that's what you set out to do. And it was a surprisingly small number because most of us are entrepreneurs by default because we weren't smart enough to be anything else. Because in school, at some point we were either, in third grade, the kid in the back of the room, eating a crayon, or in high school, we were the ones like wouldn't follow any rules, right? Or in college, we're the ones being like, well, if you're so smart, why don't you go make money? I can make more money than you, right? Or, we're in a job and realizing like there's a dead end to this ladder's leaning against the wrong building. I don't want to climb it. At whatever point we realized we just didn't fit in this box. But like we all have, and I'll just stereotype this, but we all have that mentality of like, no one's mother-in-law is super proud of their daughter bringing home a business owner. She wants to see a doctor or a lawyer or an accountant or someone that is successful because they were highly educated and have a good job and have a good career. Entrepreneurship is frowned upon. It's what the dumb kids do who can't do anything else. And I think that approach and view of entrepreneurship is what we have to work on changing. We have to, now again, I'll ruffle some feathers, but it's good timing and it's great language. We've got to make entrepreneurship great again. Like we genuinely have to
Amen to that.
raise the value of what it is we do and not look at it. Another crazy stat or another crazy thing that has been observed, like the vast majority of murders in movies are actually done by business owners and wealthy entrepreneurs. Like we have been cast as not only are we the dumb kid eating crayons in the back of the room, we're also the villain. Because if we're successful, right, we're evil. We're the bad guy, right? And one level further, like when I started to think about all this, I'd made this transition into chief wealth officer. I'd shut down other companies. I went about a year in the wilderness figuring all this out. And then like once things were coming back up, actually, name of the podcast, Two Comma Club, earned a Two Comma Club for this business. And I was so proud of that. Like this was no business partners. It was me this time. Like I built this and had come out and had something I was super proud of. It started to take off. I'd finally put a team together. Like I'd rebuilt everything that I had before. And I was so proud of it. And we got together at Thanksgiving with all my family, and everyone else could talk about like the marathons they were training for or what their kids were doing in school or what job promotions they got. But I sat there like silent, and I didn't have words or the ability to share with them what I had accomplished and what I was thankful for over the year, because I was worried they would just look at it and be like, I made $1 million in my company. They're like, brag. Like that's not, and there was no receptacle for that conversation. I was like, man, that's got to change. Especially this pendulum is changing one way or another. And if we don't get on board that path of, highly educated, good, like that's all going away. But like I said, what needs to change is we need to make entrepreneurship great again. We need to get to where people are proud to run businesses. We hold them up as something desirable, that you would go into business for yourself, that you would do that intentionally and not as a default.
Yeah, I think it's really fascinating that the first thing you want to change in the education space is the identity piece of things. Because I know that, firsthand for me, when it came to becoming an entrepreneur, like that's the very first part. You have to become it. You have to mentally accept that identity. So I'm curious to know, like, what are some of the steps you think we could do to help kind of make people enjoy that identity again, if you will?
Oh,
If you want to save time on watching all the episodes, but still get all the gold nuggets that we find from interviewing these 7, 8, and 9-figure entrepreneurs, then you can get all of that inside of the 2 Comma Club newsletter. Just go to 2ccnewsletter.com and subscribe.
so good. I don't know yet. That's what I'm like, but you're right. Like I thought about it long enough. I was like, no, it has to start with identity, right? And like I grew up on a family farm. My dad's 3rd generation, my brother's 4th generation family farm, right? So like that's in our DNA. And I grew up in a world where like the identity was like, my dad never said what his job was. He just said, I am a farmer. Like it was his identity, right? And so I grew up with that of like looking for what am I going to become, right? And I tried on accountant for a little while, and I tried on investment, I tried on insurance, but it wasn't until I let myself accept that identity of being an entrepreneur that I was like, that's it. Like I like to build businesses. I like to solve these problems. And but it was hard to let go of like, I'm supposed to tell people what my job is. What am I even supposed to say? So I think infusing what I would do is pull in and again, begin changing that perception of that entrepreneurship isn't about making money. It's not about power and control. It's not about firing your boss and having your own, because we know that doesn't actually end up being the case. Like there are a lot of days where I come in, I'm like, man, I wish I had a boss. Like I wish I had a boss who would just tell me what to do. Like that'd be a relief some of the times, right? But if we could really frame it as helping people find what their unique abilities really are and how they can use those to solve genuine problems, now we're getting to an identity piece that we can then build a skill set upon and say, okay, in order to use your unique ability and solve that problem, sure, you might need math, but let's not call you a mathematician. Let's not study math for the sake of math, because that doesn't solve problems. Let's learn the type of math that's needed to be an engineer and build a bridge, because that fits your unique ability and the problem that you want to solve in the world. Like let's tie it to our identity and make education the tool, not the end destination or the end outcome.
Yeah, definitely. I think one thing I'd add to that is, if we look at education as the tool, for example, it's like the point of it should be to, help people get the resources they need, be able to expand their skills and things of that nature. But more specifically, it should help them find I can't recall if Russell shared this, the Ikigai concept of all the different four areas where you
Hmm.
can get paid for doing something, something you enjoy, something you're passionate about, and something you're good at. And it's like if you can find that point, if that's what
Yeah.
school is all about, and then help you shift that identity, I think that could be pretty profound.
Yeah, that like again, instead of saying if you want to be an accountant, do this. If you want to be an attorney, do this. It would be let's figure out who you are. Let's line up as many of those, and now let's create a curriculum or a trajectory that puts you on a path to solving what that is. But that's it. It's got to start with identity. It's got to start with more discovery, more free time, more thinking time. Which is why for our kids, like we homeschool our kids for this very reason. It's like I don't want to send them out into very structured programs until they know who they are. And that's everybody asks, how long are you to homeschool your kids? It's like until they know who they are. When they know who they are, then we can send them out to do whatever because they've got that anchor to it. And then we start pulling in the things that will support and build up who they are and help them, to be able to achieve that. So I think that is a big component. We're trying to take kids and fit them into a box rather than figure out who they are and then build around that piece of it.
Yeah, I think that's definitely the one thing that the education system got wrong. I think in like my generation, your generation, and
Yep.
prior ones is exactly that. I don't have kids yet, but I know we're heavily talking about the idea of doing homeschooling and all that stuff for those very reasons. So
I'm
that's awesome.
biased, but I think every entrepreneur should homeschool their kids. If anybody can, entrepreneurs can, and that's actually a big reason my wife and I intentionally and we're that entrepreneur by design because I studied finance, I studied accounting, I studied wealth. I was at Goldman Sachs, and I was at Goldman Sachs. We went through the 2007 2008 entire shakeup or meltdown, and the one conclusion of everything that I had studied was to be like, the end outcome of all this is entrepreneurship. Like that was the conclusion I came to is all the wealth that we're managing is created by business owners. Everything. So I looked at that and was just like, so that Jerry Maguire moment was like, I have to, like, if I believe everything that I've been studying, I have to quit and go start a business. And then I can come back to the world of wealth. And that's exactly what ended up happening. I was like, I'm going to quit. And I started a consulting firm that had nothing to do with like wealth. It was accounting consulting and CFO for hire stuff, built a business. And then I felt I had permission to come back to the wealth space because I had the right core fundamental alignment with what creates wealth and what needs to be prioritized in that. So kudos to everybody who like I looked up to all the entrepreneurs that like have this complex of I'm not smart, I'm the dumb one, I'm just everyone else is. I'm like I looked up to you. I with all my education and all my degrees and all my fancy accolades, I looked up to the entrepreneur to the point that was like I have to become one.
That's awesome. I love how we have, somewhat similar backgrounds in the finance realm and everything. You were at Goldman Sachs, I was at JP Morgan, and we drew very similar conclusions about where a lot of the wealth comes from. So, without going too much into this, when I was there, part of my job in the wealth management department that I was in was to vet the story behind how these individuals accumulated the wealth that they had that we were doing
Fascinating.
lines of credits off of. And so, for 2 years, right out of college, I got exposed to bank accounts that were on average about $8 million to as high as 150 million on a daily basis, and learning how they did it. And the one through line that I saw is the same conclusion you drew, which was business, which was really mind
Dang.
boggling for me at that age.
That is a cool job description. So it's interesting. When I say Goldman Sachs, everybody thinks like Wolf of Wall Street and like trading floors and all that stuff. I was like, no, I'm not interested. Like, I asked specifically to be in compliance. I was like, what in the world? But it was like, that's where everything comes together. Like, I get to see tax and investment decisions and all this stuff. I wanted to be at the hub to see how everybody was making all these decisions. So it's kind of like Einstein in the patent office type idea of like reading everybody else's ideas. I had that same idea. And that's the conclusion I came to was like, every single person making it, especially transitioning through 2008, it was like there was one class of people that were all business owners, and then there was everyone else. So
100%.
yeah, 100%. That's so, man. I want to go back and have your job for a couple of years and just that's awesome.
Yeah, it was very very eye opening, and funny enough, that's actually it put that lens on me at that young age where I then turned around and I was like, okay, so where are the people who have these bank accounts, right? And as I'm have this filter on, eventually that's where I kind of realized I'm like, oh, like, there's this award for making $1 million, and I happen to find it because I just had that perspective, and then,
Ah,
here we are. So it's pretty
hanging out
interesting.
with it. And
Yeah.
here's another really interesting stat that I'd like people to understand and realize. Like, you hear the failure rates of businesses and all that kind of a thing, but here's one stat you don't hear. The vast majority of businesses that fail never make $1,000. But basically what I kind of, again, I'm a nerd, so I like to do this when I'm by myself, but I looked at not the number of businesses that were formed and then closed, but if they filed a tax return with profit, what percentage of them then went on to create $1 million in revenue? Do you know what the success rate of that is? It's 15%. So like, if you can make profit, you have a 15% chance of doing $1 million. That means you only have to try 4 or 5 times to make this work. Like, we can all do that. But like, but think of the success rates of like employments and jobs now. Like, how many jobs are out there that you can make $1 million? Not 15% of jobs. They're not 1 in 6 jobs or 1 in 7 jobs, whatever that comes to. Nowhere close to that, right? So we actually have a way higher potential success rate as business owners if we'll learn the fundamentals required to generate profits. If we'll change that focus to really understanding some of these fundamentals and not just be focused on, I don't know, everything that distracts us elsewhere. Gosh, I'll take 15% odds to make $1 million all day long. It's way better than, I don't know, the lottery
Oh
or
yeah.
the crap tables,
And it's like you said, like, how much of an opportunity do you actually have in the other lane, the one where you're employed? It's like it's so slim that it's like you're guaranteed more or less not to get there. So yeah, it's worth taking the risk. I think you'd agree, and pretty much everyone else that are in similar circles. So one of the questions I do have, what does it look like in terms of the wealth knowledge that you have to kind of help set up some of these successful entrepreneurs into a lane where they are actually not only taking the building blocks, but like using them effectively?
Yeah. Good question. And keep directing me if you want to see this kind of from different angles. And I think this is one thing that makes what I do very different from most people you'd put in the wealth space is before we'll ever work and we do great. We have great investments. We deploy a lot of capital. We've deployed over $150 million into different investments, and all that stuff is great. But where it actually starts with our clients is I will not invest with you into anything until we sit down and we break out and we understand your business. We call it our strategic finance play, where we sit down and we look at this, because if the business is not stable and predictable, then we have no business investing. That puts too much risk, because the investing world is dominated by the 93% of people who have steady, stable jobs. And so all the advice and the analysis and the thought process, it all goes toward that. And the mentality that we try to instill across the board, like, good investing is based in good assets. Like, that's the core to what we're doing. But most people haven't looked at their business through the lens of an asset. They've just looked at it through the lens of income or promotions. Like, I laugh, like, we can make fun of W-2 people who are like, oh, they're living paycheck to paycheck. I'm like, well, wait a minute. You're probably living launch to launch or promotion to promotion. Like, you're not any better, right? Unless we've gone in and we've really sort of engineered profitability and stability into our business. So we'll actually, like I said, I will not do anything to jeopardize the stability and longevity of a business, for the sake of investing or generating a rate of return. And so we come in and we start to understand the fundamental principles. How do we convert an income machine like a funnel or a promotion or whatever that is, and turn it into a business, which is an asset that can produce sustainable value with our, continued reduced involvement. And until we've done that, that's the only place we as business owners ought to invest. Is we should be investing time, effort, energy, expertise back into converting our income machine into an asset, to then go buy assets that are outside of the business, which we ultimately need to create long-standing wealth. But I've seen many, many times poor decisions, really poor results, coming from not stabilizing the underlying business. And that's where we always start there.
100%. So I think I follow along with a lot of the concepts there. And one of the things that is a key sustainable idea to me is like, for example, anything that has to do with recurring billing that you can do with clients that you can sustainably account for month over month. So how do you guys kind of like help get some of those items in place and things of that nature, if that
So
is ultimately what you do?
uh, what's awesome about business owners is they know how to solve problems as long as they can see the problem. So a lot of it is the opposite of where we're exposing all the risk. Like we'll come into businesses, oh, I'm doing great, I'm crushing all this stuff. And I'm like, oh, what would happen, just theoretically, if your ad spend increased by your ad, your cost to acquire a client increased by 50%? What would happen to your business? And they're like, I don't have any idea. So we come in and we run the numbers and it totally melts down and collapses. We're like, okay, we need to figure out, exactly where these risk, um, potentials come in. So then we can then start to solve them. And once pointed out, our business owners are very good at being like, oh, okay, cool. I could figure out how to solve that. But the trap we fall into as business owners is, as we're building a business, we do something and it works, and so then we want to do more of what works, and that makes sense. But if we do that forever, the phrase I always like to tell people is, well, no tree grows to the sky. If you think about it, it's obvious, right? Eventually, everything reaches a maximum potential, right? Another way to look at that is there's diminishing returns to an activity. Each time we do something, we get less of a result than we did the time before, or we'll find a point. So a lot of it comes in and says, where are we already hitting diminishing returns, or where has our tree already grown as tall as it's going to grow, and where do we need to shift focus? And it's super hard because like, but the webinar works so well. Why would I just not keep doing that? Like, well, every time we do it, our revenue goes up, but our cost to acquire a client goes up, our cost of fulfillment goes up, like whatever else attached to that, we're not actually generating new margins. So we go through, break the business down into basic components, top line revenue, gross margin is the amount that your business gets to keep, and then your profit is the amount that you get to keep. And understanding how our business is structured, but not just how it's structured, where it's going. The next dollar that comes in, how's that going to fall through? And that some of you are probably like already falling asleep. You're like, Brad, this sounds really super boring. But like, I promise you, like when you can see the business as a machine that you can actually predict, you will geek out and you will absolutely love it. And so we build those in and we just look for the areas that say, hey, we've underinvested here, we've overinvested here, and we need to stop doing that, even though, like, not stop doing it, just stop doing more of it and start allocating new dollars to building other things. And a lot of it, it's the boring stuff. It's training and team, and it's support, and it's replication of ideas, and getting you out of the seat of, well, everybody has to talk to John in order to get a result, whatever that would be. And it's sitting down and turning the knowledge that we have, the processes, the systems, the outcomes, into actual assets, or it's starting to bring in other team members that are better than us in those areas that can be done. So one major area in the world of internet marketing is recurring revenue. It's huge. It's generally a big lever that we look for. But like I said, it goes beyond that, because that revenue won't sustain without the assets. Usually we don't have recurring revenue, not because we don't know about it. We don't actually know how to provide the value to our clients in that way. And so it's actually re-engineering the business with some of those angles, or it might be lead gen, right? Let's not focus on more cold traffic. Let's continue to do the cold traffic we're doing. But what if we improved nurture campaigns, or what if we improved organic traffic, or what if we created some strategic partnerships? Or instead of that, what if we vertically integrated? The next problem our client has to solve is this. Rather than going and getting more clients, why don't we get more revenue out of the clients we already have? And let's vertically integrate a product and have something else to sell. Or why don't we JV into something else? And like I said, so there's different levers that we can pull there, and they're unique to each client. But until we solve that and be able to answer a question of what would you do if, right? And pick the worst thing you can imagine to your business, then run a scenario and say, what would I do? Well, that's what we should just do now, instead of waiting until the hurricane comes through, right? The tornado tears apart, our trailer. We should just start doing those things now.
Yeah, I think I totally agree with all of that. And to put a term to that, I would kind of consider that something along the lines of like shit testing your business almost, you know?
Yes.
It's like what's gonna end up coming through that's gonna make the whole thing fall apart, and how are we gonna adapt, and then like you said, make that happen. So once you've gotten through that process with your clients, like what happens at that transition point? What kind of assets are you helping them to kind of create in their personal wealth side of things?
So on the personal wealth side, this is a little bit backwards, but a relief to most. The first thing we want to do is create more certainty in the life of our clients. So as business owners, we live in just constant chaos of some order or another, right? But again, back to, we always double down on what works for us before. When we want something to change or we want to get out of that chaotic mentality, we're like, well, last time I launched this or did this, it worked, so I'll just keep doing more. And we think the antidote to solve our problem is more chaos. But if you picture the yin yang symbol, right? It's the opposing forces of order and chaos. We just keep pushing more into chaos. But if we have a lot of chaos, that's not what we actually need. What we need is to balance the chaos with more certainty, which then allows us to go back into the world of chaos and do more. Like a quick way we like to think about this is like, imagine, I love horsepower. I have a crippling addiction to horsepower. So let's say that I rent a Porsche and I'm going to go drive a mountain road and have a blast and all of that. But I wake up and it just snowed overnight. Like, how much of that horsepower, like Porsche 911 turbo, like that's 700 horsepower, can I even use it all? No, I could be driving a Prius and it wouldn't matter because I don't have enough certainty to use the potential that I have. And most people significantly discount the economic impact of certainty. And the more certainty we can create, the more risk or the more upside or the more opportunity we can then go pursue. So we spend a lot of time reducing our tax burdens, reducing our risk, and getting very liquid. Because with a liquid base, we can then see the world so differently than we have before. And so if we can add certainty first, because that's the problem with investing, is it's more chaos. Like, you're like, I'm running a business and now you want me to like have real estate and do all this. What are you talking about? I don't have time for what I have, but you're just adding more to my plate. And it's like, no, we need to, again, reduce that chaos first, create more certainty before we bring in something else. So we spend a lot of time just, like I said, organizing, reducing taxes, reducing complexity, building systems and automations, and getting very like orders of magnitude more liquid than you think you ever need. And if you wonder, like, go Google Apple's balance sheet and see how much cash they sit on. They have more cash than some of Fortune 500 companies' entire market cap. They have more cash than, like, I think that it's just their cash balance alone is something like in the top 50 market cap companies, like the entire value of the companies, how much cash they sit on. So we need to be sitting on more liquidity to give us that decision-making power, and then we can actually go in and begin investing. So we generally start there. And then to now fully answer the question of what types of assets we put clients into, you don't know this, but rate of return is totally irrelevant. It doesn't matter. The rate of return is not what people are like, where can I make the most money? You know what? It doesn't even matter. And then everyone's like, okay, now I'm super confused. Well, here's the deal. If you gave me $1 to go put into an investment and we compared the return that I could generate for you to $1 put back into your own business, you would laugh me out of the room. It'd be stupid. You'd never give me any money because the rate of return we can make in our business is thousands of percents. So if we only made rate of return decisions, we would never invest. We would only grow our businesses. But there's a problem with our businesses. And I like to look at it this way. I'm a sports fan, so let's talk football for a second. So professional football, Joe Montana, one of the greatest quarterbacks of all time, right? But he got cut from the Chiefs. And this is before Taylor Swift Chiefs. This is like Chiefs when they were terrible, right? But on SportsCenter, when they talk about Joe Montana, they don't talk about when he got cut by the Chiefs. What do they talk about? The Super Bowl that he won. The multiple Super Bowls that he won. So in sports, there's this concept of once a champion, always a champion, right? And if you can rise to that level, you will always be considered one of the greats, even though we know every great player ends up getting cut. It's just how it works, right? But in business, it doesn't work the same. If I grow a big business, I'm super successful, and then I make a mistake and I lose it all, do people talk about the fact that I got a 2 Comma Club award or have a 10X award or any of that? What do they talk about?
How you lost it.
How you lost it all, right? So in business, we need to figure out what's the equivalent of a Super Bowl ring. What makes it so that no matter what happens, we still remain a champion? Well, that's the investments we get into. That's being able to have wealth that is not tied to the business that we happen to be currently running at any given moment. And the staying power, the actual trophy, the Super Bowl ring is not rate of return. It's not even net worth. It's cash flow. Because if I have assets that put cash flow in my pocket and can sustain my lifestyle and more, then my business becomes irrelevant to me. And I can have total freedom and total control, total sovereignty over even my own business. And I can make the critical decisions necessary in my business to grow it the way that it needs to grow, not based on whether my lifestyle is taken care of. That's your Super Bowl ring. If we can use the business to do that, then we've become what we call financially sovereign. Because as business owners, we're financially free. We can make money is not generally the restricting force in our life. We can go make the money that we need. But we're not sovereign because we're still beholden to the profits that our business produces. And once we can, so the only reason I take money out of my business and invest in something else is if it puts cash flow into my pocket, because that's what gives me freedom.
Yeah, that's really fascinating there, and I love that idea of talking about how interest rates are not. Yeah, I guess interest rates are the metric that are it's relatively unimportant, right? Because like
Yep.
I think about certain concepts through opportunity cost a lot of the time, right? And it's like,
So you're a smart guy. You know hard words like that is exactly the point.
yeah. And so like the big deal is not necessarily like how much rate of return you're getting, but like do you have that freedom as you're mentioning by having more monthly recurring revenue through cash flow than you do in your lifestyle expenses or even business expenses or both? Because at that point, any additional dollar you put in your own pocket is just it's fun money or seed money or whatever you want to do with it, right? Go start that non for profit or whatever that next journey is, or
Or go
just
buy
reinvest it back in the
horsepower,
business.
whatever.
Yeah, yeah, exactly.
And
So
and and it's funny, John. So that's it. I don't have scorecards that track rate of return. I don't even have, this might sound weird to people, I don't even know what my net worth is. It's totally irrelevant to me. I don't even care. And I know what my top line for my business is because I have to look at that. But what I actually am more focused on at my stage of business is whether it's my assets or whether it's my business, it's how much cash flow that they're producing that's consistent. So in my business, I look at recurring revenue. That's the number I'm driving hard for, not revenue that comes from activities that we have to proactively go to the market, take risk, and run. And I look at the profitability that is only linked to that recurring revenue. And we just hit an interesting point. We're now driving the profitability margins that I normally shoot for in an overall business just off of our recurring revenue. So I could shut off all the, extra type stuff. Like I turn all my ads off, shut all my funnels down. I could turn off all my client acquisitions, and I'm still driving a healthy, respectable profit margin just off of the continued sustainable operations. Like that, now my business is an asset, right? And then I look to my other assets and say, not what my rate of return is, but what is that sustainable long-term cash flow that those are producing? Those, when I look at wealth, those are the numbers, the scorecard that I track it off of.
that's awesome. I couldn't say it any better myself. That's fantastic. So let's change gears a little bit here and let's head toward the marketing side of things. I think we've covered basically the essence of what is required in order to be wealthy in today's day and age, and as a business owner and everything, and set yourself up honestly just forever. So in the marketing world, like what tactics were you using to kind of acquire some of these clients that you first got, and how are you getting discovered in that respect?
So I'm gonna go, like I said, probably different than most people talk about because I'm not good at like paid ads. Have never, not that they've never done well. We've used them all, but I wouldn't say that's where we have a lot to add to the conversation. Like I still am in Russell's groups to learn what everybody else is doing. The thing that we did really hone in and focus on was this idea of I didn't want to be a commodity. I didn't want to sell the same thing that everybody else is and compete there. I really wanted to create that uniqueness. So that's what I would talk about. That's something I can talk about. We actually spoke about this at FHL one year about creating a movement and the impact that can have on marketing. And so as we focused into that, we went very much away from the inputs and outputs of what somebody would get, and we went to the destination that they're leading to, the overarching outcome. So we don't talk about, hey, I do tax strategy, I file your taxes, or we find good real estate investments. It's not that. Like you heard it at the beginning. I'm your chief wealth officer. And that's like, oh, that's what I want, right? Now we're in a category of one, and we get to be premium priced because we get to provide the service. We get to charge not based on the time it takes us or how good they could be anywhere else. We get to be charged based on the outcome that we can produce for somebody. And if I can take that stress off your plate and create a strategy to get you to where you're wealthy for the rest of your life, how much would you pay for that? Everything, like money, whatever you have available that wouldn't, bankrupt you. So really actually honing in on who it is you're serving. And in order to get to chief wealth officer, I had to not serve a lot of people that could have made me a lot of money, right? So it's not who are you going to serve, it's who are you not a fit for. And then designing the highest impact solution that you can provide for them. Then come in and make an offer that gets that solution for that person. So that's sort of, to me, the little different angle that we solved things from, rather than saying, what I want a 997 offer, what would I like throw into it? Think like grocery cart in the, in the store, like just fill it up with whatever. It was very, very intentional we had to know deeply the person that we're working with. We had to know really what the problem actually was, not the problem they told me, because you'll tell me my CPA is dumb and I'm paying too much in taxes. I'm like, cool, I hear you, but that's not the real problem, right? We had to go to where we identified the actual core problem, and then we created ground up. And the way we do things, no one else does it this way, because again, we're not a CPA, we're not a real estate guru, we're not those other people. We create a solution specifically for those people, and then we started marketing that. So I think people jump into the marketing world sometimes prematurely, and they try to market what they're seeing other people market. They're trying to market what they think their client wants, because their client's like, I want to pay less taxes, so they market less taxes, when really it takes that reflection of, again, maybe what am I uniquely good at? Who am I uniquely here to serve? And what's the one big domino problem I can solve for them, that if I solved that, the rest of what they worry about wouldn't matter, or wouldn't be as big of a problem as it is right now. And then that became our core offering. And so then from our standpoint, I don't know, this might just be the way I'm wired. Maybe it's your and my view on wealth, being hammered that way. I did not want to start at the bottom and work my way up. I didn't want to start from like $7 to then 997, then mid ticket. So we took that core problem and we went straight to high ticket, because it was easier to sell one or two high ticket things than 1,000 or 2,000 lower ticket things. At least for me, that's the way that it's always been. So we took, again, the big lever problem, the big domino problem, put a solution together, and then just got in front of our clients and sold high ticket. And only when we were totally full of and high ticket is awesome from a ticket standpoint, but it's a lot of work to deliver. There's a lot there. It's not as scalable. I get all of those objections, but I would rather solve scalability problems with a whole bunch of money in my bank account than with not very much money in my bank account. So we saturate ourselves with high ticket delivery, and then we work down from there, and build out everything else. And if you look at, you guys will all Google me and go find my funnels, and I'm going to be super embarrassed because we're doing virtually nothing front facing yet, because we haven't saturated this upper level that just doesn't require the same lift, right? And we're just now moving into the other areas where we're now building an audience, we're building a list, we're making, mid-ticket offers, much more scalable, less one-to-one, all of that. And then eventually you'll see us, full scale ads and socials and all of that stuff. But if you pull up my Facebook, I haven't posted on Facebook in, I don't know, months. Just isn't. So that's the design that we did. And people are like, oh, high ticket's the greatest. But they miss that point of high ticket works really well when you know who you're serving and what that big domino is that you can knock over. Because then so all I have to do is walk into a room of business owners and be like, who wants a chief wealth officer? And they're like, I do. And they throw their money at me. It's like, great. Super easy to do.
That's awesome. I love that. That's hilarious. I can imagine that illustration of everybody just pulling out their cards and just fwa, fwa.
I'll do it. That's what I've wanted.
That's awesome.
but and I'll warn the audience, like I got an armchair in my office. It's blue. I sat in that chair for like a year thinking about this. So it's not easy. It's simple. Like those steps are very simple, but it was lots of reflection, lots of working, lots of kind of processing. What is the real problem? That's not the real problem. Is there anything deeper? And then testing it on people, and then going to it was a lot of deep thinking, heavy lifting work to get it down to now how simple and now what on the outside seems really easy to do. So don't be afraid of the hard work. It's not going to come quick. It shouldn't come quick, because if it came quick, everybody else is already doing it, or you haven't, know thyself is a pretty deep, question. So getting to that but it ends up being worth the effort for at least how we've done it. And that's how we've scaled. We now have 4 businesses that have won 2 comma clubs or bigger. And we've done the same thing with all of them. Avatar, big domino problem. That becomes the core offer. And then we go high ticket and then work it down from there. That's how we've done all of our business growth has been that.
I think that what you've illustrated by starting at the top versus the bottom is a lot of strategic value in that. Because, I mean, both you and I as numbers guys, one of the things that I see that you probably had in mind knowing this is like, if you have the ability to bring in significant numbers right out the gate through your business, that's one of the business or building blocks you can move over to the personal side, put it into an asset, and then turn around, and that begins to build that cash flow that ultimately keeps you safe as you build up the rest of the business and rinse and repeat. So.
Yep.
That's awesome.
And you're 100% right. We do it in all areas of deployment. I always want to go to the thing that will move the lever the most, do that one thing, and then move down through it. And that's probably another point to make of like, I do see a lot of people, they'll come to an event like Funnel Hacking Live, or they'll come to a mastermind and they'll leave with, like we always do, just a notebook of everything. And they're like, I have to do all of this right now. A powerful exercise I try to leave with anytime I learn something new, and you get this from the finance game as well, but there's order of operations is important, right? Like, take everything you do in the morning to get ready. Let's say you wrote it out, on a list, and then cut it into strips of paper. And then imagine you did your morning routine by just drawing out random strips out of a hat. It would not go well, because you might get dressed and then shower, and that's going to be a disaster. Or eat and then cook, and that's going to be not very great. So the order we do things in matters even more than the actual steps, because I can remove a couple of steps from my morning routine and still get the outcome that I wanted, right? I don't need to do every single step perfectly. I actually just need to follow the recipe the right way. But a lot of us just want to think that it's just this random list of just doing everything that we're seeing somebody else doing, instead of sitting down and saying, what's my order of operations? What of all this stuff comes first and will have the biggest impact, and then the next thing, and then the next thing, and then the next thing. And you'll come to find out a lot of what sounded like a really good idea that we need to spend money and time and do right now, we may not even need to do ever. But we'll find the 1 or 2 things that become the needle mover, and we gain such quality of life back, because it's the 80-20, but like an engineered way to do the 80-20, to where I'm only doing 20% of the stuff and I'm getting 80% of the results, and everything ends up being better that way. So that's something I would look at as well, to be like, oh, I need to look at Russell, who's marketing, a multi, 10, 20, $100 million business, and I do everything that they're doing. The better question would say, what was Russell doing when his business was the size of my business? And let's make it look like that instead. That's a much more powerful question for me.
100%. I love how you brought up the idea of order of operations there, because it really highlights that inherent trait to entrepreneurs where we're constantly needing to test and try different things in order to be able to actually get results. And I think one of the biggest things that you have to be comfortable with once you accept that identity is a lot of being an entrepreneur is being willing to fail, right? And it's like, I think I heard this quote, and it goes something like the road to success is paved with failure, or something like that.
Yep.
And it's like, that's the name of the game there. So, as you're going through your entrepreneurial journey, what have been some of the kind of like resistance points that you've had to come through in order to get to the level of success that you're at currently?
I'm not sure there are any unique to what everybody else, but it's fun to know that other people, it's useful to know that other people have gone through them as well. And resistance points. So for me, we already touched on it. The first biggest hurdle I had to get over was accepting that I was going to be an entrepreneur. Like, I quit my job and started testing and figuring this stuff out and didn't tell my parents for 2 years because I was their son who had an accounting degree and they were proud of me and I was quitting that to go do all this other stuff. So the identity piece was the first big hurdle I had to get over, that I could be proud of doing that. Um so like I said, for me, that's probably a big one because I then struggle with permission to do things because I'm a very logical person. I'm very I was educated that way, so I had to overcome the that like, am I the one? Do I have permission to do this? Did somebody anoint me and or allow me, right? Because I came from wealth, it was like licenses and restrictions and all that kind of stuff. So I also had to come over, like, after identity, it was like, oh wait, there is no rule book. Like I can do anything that as long as it works. Like just the litmus test was, does it work or not? Not is it right? Is there an answer in the like? So overcoming that of like, wait a minute, that's where failure is necessary. Is no one knows the right answer until we know what doesn't work, and then it teaches us what does. So getting over that mentality for me was a big one. Um, and then, on a more personal note, again, I didn't start out as an entrepreneur until I was married. I had a couple of kids, I had a mortgage. And so being able to take on that risk, that was hard, right? To be willing to be able to do that, which is why I think I engineered from more the wealth perspective of adding enough certainty to be able to take the risk. But the lesson I was fortunate to learn really early was to have very good mentors, right? I think there's a psalm that says there's safety in counsel. Like having counsel around me was incredibly important. And, the first was God. Was like, I needed to ensure I was going to the source that had answers for me of what I should actually do, because nobody else ever can the way he can. So that was piece number one. But then my wife was a counselor that really helped. And she was the one that was like, no, you can do this. Go do it. We're going to be fine. Like she encouraged me to get over that. And then having a couple of very strategic mentors that were more than just tactically good at what they were. This is why I love Russell is yes, he's a good marketer, but he's a good businessman. He's honest. He's a good family man. Like he has so many other traits that I aspire to that I could take counsel from him, not just, individual direction. So I always made sure I had a couple of people, whether it was business partners, coaches, somebody that would be willing to tell me what's going to be required, what I'm not doing well. Like, because if I live in a world of fantasy, I can't get anywhere. And so having good, solid counsel around me was indispensable to me. With that, I could overcome anything else, because I was like, okay, if I see and know the obstacle, I'm confident enough I can overcome it. But where I get, like I said, really worried, that permission side of it, that entrepreneur side of it, is like, if I don't know, I freeze and I sit and I overanalyze and I overthink and I don't go anywhere. And so to me, having somebody say, no, you're on the right path. Yep, keep going. This is worth working through. That's for sure what helps, measurably probably the most overcoming that.
Yeah, I think there's a lot to be said about like the environment that you have and curating it for your success in that respect. So that's awesome.
And the environment we're coming from, because entrepreneurship isn't great and we need to make it great again. Everyone's like, oh, you're going to fail. That's risky. I wouldn't do that. Are you sure about that? And I had to get it. I had to not, I had to cut those people out. I just had to stop asking them and sharing that with them and find people that could say, yes, you can do it. Here's how I did it. It's totally worth it. Here are the things, and coaching me and lifting me up rather than, the other side of it.
Yeah, definitely. It's a really interesting spot that you get to in the entrepreneurial journey, where you start becoming consciously aware of the people who are pushing you in the direction where you want to go and those who are more or less holding you back. But it's not in a way where they mean you harm. They mean you the best. They just don't have the results that you're going for, and therefore they haven't had to travel that same road. So,
Yep.
yeah. Well, I greatly appreciate your time today. This has been fantastic, and
Thank
I'd
you for
love
having
to.
me on. I love these conversations. You're a fantastic host, and I very much enjoyed the conversation. So even if nobody, I hope others did, but even if not, dude, this was great. Just you and I chatting. It was great.
Well, thank you so much. So for any of our listeners who are still with us, where can they get a hold of you if they want to get involved in anything that you guys have going on or have any questions for you?
Oh, well, I appreciate that, John. You take your audience seriously and you care about them, so I appreciate the invitation for that. For us, the most important part of what we're doing is, in order to get anybody results, we've got to rework their mindset mentality. I know that's cliche to some degree, but for us, it really is. Like, we have to understand how entrepreneurs work, how we think, how money works in our lives, because everything you've been taught has been taught to the 93% of people that do not work for themselves. So for us, the place to start is to really understand how money works for the entrepreneur. And so what I do from time to time, like I said, I don't produce a lot of content. I'm not on the socials. I don't do that. But I do get invited to speak at pretty unique groups like Russell's group, Taylor Welch's group, some of this other stuff. So when I get a chance to do that, I'll generally take that out. And that's kind of the thing that I can offer to everybody is like, hey, I know you couldn't pay 150 grand to be in the room with Russell, but why don't I show you what I taught them to help you sort of get that leg up. So that's where I would love to send everybody. Sorry about the URL in advance. It's Sovereign Entrepreneur, 2 French words with lots of E's back together. You'll figure it out. Just chat GPT and get your help. But it's sovereignentrepreneur.com/podcast. And it'll go to the last training I did was at Taylor's private mastermind group, Taylor Welch. I taught for about 4 or 5 hours on a concept I call the energy of wealth. Because like back to this whole idea, rate of return doesn't matter. Cash flow is what we're maximizing. The one resource that we have as entrepreneurs that we need to protect most dearly is our energy. It's not our time. It's not our capital. It's our energy. And so I kind of teach wealth through the lens of we need to run this in a way that maximizes our ability to be entrepreneurs. And so I line up that order of operations again of how we solve that problem as entrepreneurs. So I would love to give that to everybody. Like I said, everybody else, you had to pay tens of thousands of dollars to be in that room, but you guys can have it and go through because I really genuinely think that'll be the best place for everybody to start. And then on there, I've got a newsletter there that I sometimes write and most of the time don't, but every once in a while something will come out. So that's how you then just stay informed in the types of things, where I'm speaking, what events we're holding, or get more information from our team if we're a right fit for you.
Awesome. Well, thanks again so much. And for everybody who's listening, look out for those energy vampires. You got to be careful. All right. Well, thanks, Brad. Have a good one.
Thanks, John.